If you're in crypto and you're freaking out, you shouldn't be. In this video, I'm going to explain exactly why. This isn't hopium, everybody. I'm going to unemotionally just present data to you that we've already been tracking. Zoom out on these charts in the markets right now. This is Bitcoin. We're going to use an analysis today, a beautiful structure happening right now. Ethereum, an anticipated break to the downside, and ADA, an anticipated break to the downside. I'm not even going to waste any time. I want to do analysis on all of these charts. I want to show you a clip from July 22nd, just over a week ago. Check this, 75 or so out of this descending triangle. Number one, Cardano could pull back first. Maybe it needs to test the 60s, test the upper trend line. And we're going to talk more about this in relation to ADA analysis. My point being, as we start this video, the move that is happening right now in crypto is from a fundamental technical analysis perspective, very normal. But there's other things actually happening in the markets as well that I want to lead with in this video. So hit the subscribe, hit the like on the way in. If you're not in our intelligence system, go to our homepage right now. If you've been on the fence, go to our homepage and just look around. Look around for something special. We have a very special deal. If you want to get in our system and give us a try, we have risk models, exits, planners, all that good stuff back there. So check us out in our intelligence system. Let's jump into this video. I want to start with something, okay? I want to try and explain before we get into the technicals, because the technical moves happening on the charts are very easy to understand and see and spot. But I want to explain something else to you. I reposted Marty Party over here. So market maker update. There is a dynamic here in the crypto space that I think we all need to be aware of. I don't know if this comes off boring or whatnot, but if you're in the crypto space, if you're watching these charts and the volatility, you need to pay attention to this. You have to watch this. Who is selling crypto? Here are verifiable facts, not speculations. Binance and Coinbase are selling assets to flush their perpetual markets. So I reposted that and I basically just said exchanges are sweeping the floors on leverage traders and people are getting liquidated while market makers and exchanges enjoy the gains. It's manipulation. It should be illegal. This is one dynamic that is happening in relation to crypto markets. And please understand, when it comes to, this is something I posted earlier today, Trueflation's real-time inflation just cratered to 1.67%, below the Fed target of 2%. We're entering the part of the business cycle where disinflation meets policy pivot. We're coming to this really bullish area for risk-on assets in my view. Market makers and exchanges know that, right? So they're going to play with these tariff, August 1st headlines and narratives. They're going to play right into these headlines and they're going to move markets in either direction and they're going to liquidate people. And so I saw this by Marty Party as well today. I'm not going to read this whole thing, but there is no law in crypto in relation to this. But until the U.S. passed Clarity and Market Structure Acts, this manipulation is legal. This is what it is. We have to live with it. Manipulation is fair game. So is an exchange hosting a spot and futures product and trading against their users. It's legal right now. SEC, Paul Atkins, and Donald Trump, they're on it. We need these laws and we need to get smarter. It's so true. We need to get smarter as an industry. But I wanted to bring that up because you know what? It's so interesting to me too as these moves play right into the technicals. I genuinely think these teams at these exchanges, the market makers, I think they're doing technical analysis. I think they're bringing in the confluence of technical analysis. They're watching content creators. They're watching targets. They're watching narratives. They're watching it all so they can just, be the puppeteer behind these markets. That's what it seems like to me. And so that's also why it doesn't surprise me that even put aside headlines, put aside manipulation, targets consistently, they're hit. Let's talk about that from a technical analysis perspective. This is why I like technical analysis. It just removes emotion away from the equation. Now, here's Bitcoin. I want to briefly mention this because I think it's something we've talked a lot about, and I've not done much Bitcoin content lately. I want to do an update. This is a midterm inverse head and shoulders that we tracked very well. Right now, we're getting a revisit to the neckline, a very normal technical move that we want to see. I think we could even fall below the neckline, and this will still be in play to a higher low Fibonacci. So this is swing low back here to swing high. That higher low Fibonacci range, I think, is in play. And I just want to bring that to your attention. The range is around 107,000 to around 103,000. That's like a fail-safe. Let's see what happens at that area if we fall there. But even in the short term, check out the confluence of the 50-day moving average at the neckline. Just a really nice throwback to the neckline, a very normal move for an inverse head and shoulders. Not the first time we've seen it. We're gonna see in a different chart, but it's happening. Let's see what happens at support at $11,000. I'm saying we saw it before because guess what? Look at this macro inverse head and shoulders from last cycle. We got the throwback to the neckline right there. People were panicking, if you remember, in April, a tariff fear event. It's so interesting that we're having a tariff fear event back to a neckline. It's a smaller inverse head and shoulders compared to the massive one. But look at this. It's crazy. So we got support at the neckline last time. I don't know if we're going to get support this time. We might not, right? This inverse head and shoulders might be invalidated. We might start falling lower. I don't know. But these are the areas I'm watching on Bitcoin. Going over to Ethereum. By the way, there's a snapshot of the total crypto market cap excluding Bitcoin. So that's altcoin charts, just coiling. Higher highs, higher lows, coiling. Here's Ethereum doing what we've already been talking about nonstop, this resistance level. And so again, August 1st, tariff deadline, right? Exchanges know it. Market makers know it. They also see Ethereum at this resistance area anyway. And they're just like, you know what? Boom. Such a good time just to bring us back into the apex. Let's liquidate longs. Let's do it. And this looks like what's happening, right? And even if there's no manipulation, this is happening. It's just resistance at this area. And so I've been speculating about a potential inverse head and shoulders on this chart. Now it's becoming even more possible, right? So if we go to the daily chart, we had a very short-term just kind of rising wedge that we were tracking on Ethereum, and it would have been awesome if Ethereum went the opposite direction and broke to the upside. That would have been an insane macro indicator breaking this area. Even our risk model score was like around 56 when I did the video. I'm not sure if I'm logged in right now, but I am logged in. So Ethereum's risk model, no, I'm not logged in right now. I'm not going to log in right now. But either way, it's 56. It's probably somewhere in those mid 50 ranges. And we're going to see now that it's consolidating. That's probably going to update. Going to probably level out again. How long will the consolidation last? Will our risk score for Ethereum fall back into the 40s? Are we going to fall back into, instead of hold, kind of a moderate buy? That's what I'll be watching. But either way, we've been talking about this potential pullback on Ethereum anywhere from the 20-day moving average to the 50-day moving average down here around $2,900 is just normal, especially after, look at this, swing high, consolidate, swing high, and now we're in a new consolidation zone. We want to see support at this apex, obviously, right? But now that we have all these moving averages trending up nicely, it's normal to have an asset revisit and test these areas, whether it's sideways and just pulling into these moving averages, or if it's a quite a steep fall into the moving averages. It's normal. So that's what I'm watching on Ethereum. I see a lot of people, when we start getting moves like this, they're just like, we're crypto lost. It's over. It's done. It's game over, man. I can't comprehend that because I'm constantly zoomed out on the charts. I'm not just zoomed in. So the red candles, I don't like them. I don't enjoy them. Like days like today, I do wonder how low it's going to go, consolidate. But man, if you've been here for years, this is literally the name of the game. Even in uptrends, even if Ethereum's going to break out to all-time highs, that journey is going to be insane. There's going to be dips. There's going to be volatility. Going over to Cardano, here's what we're looking at on Cardano. I showed you the clip. I'm not going to show the clip again, but we were talking about the drawback, the pullback to the apex of this triangle, a descending triangle on ADA. So if we're looking at that, here's what we're looking at now. We were at 88 cents when I did the video on July 22nd. And, that's somewhere back here. And check it out. We've continued to fall. We're not even at the apex yet. We're not even at the 50-day moving average around 67 cents. ADA, even going into this weekend, I'd be so surprised if ADA doesn't just fall into this range. I'd be so surprised if it actually just bounces, doesn't even fall really below 70 cents much, and just starts bouncing to the upside. I'd be very surprised. I want to watch and see what ADA does at this higher low Fibonacci down to 60 cents up to around 67 cents. Kind of like this fail-safe below all the moving averages here, the 50, the 200, the 20, obviously, and then the descending triangle trend line. If we fall below that, is ADA at least putting in some type of higher low? Or is it really going to test the entire apex, test this lower trend line, right? Is it going to be that type of pullback to see what happens? I don't know. I'm going to monitor ADA, but what I can tell you right now, as we already anticipated in this video from over a week ago, the move that's happening on ADA is completely normal. Another thing to watch for as we close this week out in the next couple of days into next week is the moving averages on the weekly. Remember, this 200-week moving average in red right there is the bottom of the bull market doors that's sitting around 62 cents. We saw what that area is here on the daily. There's that Fibonacci. This is a very big area. I hope to see ADA hold support. I don't know if it will, but that's what I will be monitoring. If Cardano could see support even better at the 20 and the 50, that would be phenomenal. And, you know, maybe we close a candle below the 20 and the 50, but we start opening a candle and we can make our way back above the 20 and 50. We want to start seeing these moving averages start trending up now on the weekly. So we see a lot of consolidation of the moving averages. We have to give that time, but the coiling, the consolidation, all of that, very normal. We just want to see it start trending up, and we want to see support at all of these moving averages. So that's down to 62 cents. I'll be monitoring to see what Cardano does there. So that's it for now. Let's see what price action does as we go into the weekend. Weekends can kind of be crazy. It was a very crazy, volatile week in terms of headlines, and there's a lot going on right now to track. But either way, I'm hanging out. I am zoomed out. Going back to this post, inflation breaks below target, then rate cuts follow, then liquidity floods back, then bull runs ignite. All while trillions are preparing to flood into crypto because of pro-crypto legislation and clarity. So those are my thoughts. If you're not in our intelligence system and you are a long-term investor, please check us out. Go over there, read through our page. We've got our risk models, our on-chain metrics, our exit planners. We have our autonomous zero AI. You can just talk about, strategize your exits, strategize how you're operating through this cycle. And again, a very special deal over there if you want to go look into that. So appreciate you cruising through. I will see you in the next video. God bless.